Today in crypto, I want to share some tips about how to trade Bitcoin and cryptocurrency that have personally helped me in my trading journey, which I believe are incredibly important for new traders to know about and to master, and which you must absolutely know if you are currently trading crypto or you're just looking to start trading cryptocurrency. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild land of cryptocurrency. Also, if you are totally new to cryptocurrency trading, then you need to actually learn the ropes before you throw your hard-earned money down on the table and get eaten up by the whales on exchanges. You can check out my course called Crypto Trading Explained. It is designed for complete beginners, and it will walk you through all of the basics that you need to know to get started, including simple things like understanding a chart, the key indicators and the key patterns that you need to know as a trader, how to manage your risk, how to set a stop loss, all of that and so much more. There's a link down below where you can find out more information about that course. And whether you do my course or not, please, if you're new to trading, take the time to educate yourself on how to do it. This is one of the key reasons why most traders lose. Also, do understand that you do not need to trade to be successful with cryptocurrency. In fact, quite the opposite. Most traders across long enough timeline lose money. Getting good at trading, it's a tough thing. And the best method for most people remains buying and holding a small group of promising cryptocurrencies and holding them for a long period of time. With that being said, let's get this. Number one, understand that Bitcoin moves the market. When Bitcoin makes a big move in either direction, altcoins tend to suffer. And in times of uncertainty, people will drop altcoins and they'll run back into Bitcoin or they'll run back into cash. Also, you need to decide if your trading goal is to get more Bitcoin or if it's to get more dollars, because that's going to strongly influence what pairs you actually look at when you're trading. Personally, about 90% of my trades are done with the intention of getting more Bitcoin. So I trade altcoins, I trade them against Bitcoin in order to achieve this goal. Now, I'm not here to tell you which option is right for you, but you do need to consider this before you start trading. Number two, don't be afraid of green candles because those can often represent a breakout. In general, as a trader buying a falling knife, that can lead to trouble. Most traders, they will actually wait for a breakout before committing to a trade. Let me give you an example here. You see, we have a nice descending line of resistance. You can see here that we are testing that line of resistance. Buying here while testing resistance, this is a dangerous proposal. The price could easily fail to break resistance and you will lose the trade. However, if you wait for a green candle to break out of that descending line, then it becomes much more likely that your trade will be successful as it represents a break of that downtrend. Also understand that a breakout is only actually confirmed when the candle confirms. So that means when that time period for the candle finishes. You can look here at the Stellar Lumens weekly chart. We had multiple false breakouts before a real breakout took place. So patience was absolutely key in this situation as a trader. We saw those big wicks retracing back down, which meant the candle did not confirm above that line of resistance. And look, you're going to miss setups. This is fine. There's always going to be another setup, so just keep that in mind. Don't FOMO into positions. Number three, use trading software. Now, one thing that really helped me to step up my trading game is using trading software. So using software, it allows you to trade on multiple exchanges all from one dashboard. It also allows for you to set more advanced order types. For example, you can have an order that has both a sell and a stop loss included in it. You can also add in things like a trailing stop loss as well. So there's a lot of great flexibility that using trading software like this can give you. Now, my personal recommendation is 3 commas. There's a link in the description, which will give you a 10% discount and a free trial if you want to test out that trading software. There's also a link to a tutorial on how to use 3 commas in the description. Number 4. Don't overtrade. This is such a common mistake that new traders make. Keep it chill, man. Keep it chill, especially at the start. You don't need to be making 10 trades a day. That's just going to cloud your mind and make it more difficult for you to manage your trades. Start by trading just a few different pairs to understand how everything works, to get a hang of how the patterns are actually playing out. I personally rarely have more than 2 or 3 trades open at any given time. Over trading, it makes it difficult to keep up on your trades. And of course, it can compound your losses if Bitcoin moves, since you can have 10 positions all getting knocked out at the same time. So take your time to find good trades with setups that fit your trading strategy. And when you do, then commit your capital and be patient. And as an additional note, it often doesn't pay to exit a good setup that simply hasn't played out yet to chase a pump. Make sure you stick to your plan. Number 5, learn how to manage risk. Here's the simple reality. You are going to lose trades. You're going to lose lots of trades. But what separates the winners from the losers long term is understanding how to manage your risk. There are 3 super effective ways that you can do this. The first one is by using a stop loss. You absolutely have to use a stop loss if you're trading. Even the best charted trade with the most awesome technical bullish setups can turn against you very, very quickly. So always protect your downside by using a stop loss. They've saved me more times than I can remember. Stop loss should always be set in such a way that if it triggers because the trade thesis is invalidated, not because you set it too tight because you were afraid that things are going to move around. That's how you lose right there. The second risk management essential is position sizing. Do not risk your entire account on one trade. Any given trade should be no more than 2 to 5% of your entire trading account. Now, yes, this does limit your upside potential, but it also limits your downside potential, because losing 10% of 5% of your account is a very different thing than losing 10% of your entire account. And the third key to risk management, only trade with disposable income. Your trading account should be money that can just disappear, and you're not going to particularly miss it if it does. Violate these rules at your peril. Number 6. Beware of leverage trading. Now, I mention this because this is the most high risk, high reward kind of trading out there. Essentially, leverage trading allows you to play with more than you actually have in your trading account. So if you, for example, have $1,000 in your trading account and you're trading with 100x leverage, then you are trading with the equivalent of $100,000. Yes, that sounds pretty sweet, doesn't it? Wrong. No, it's not sweet at all. Because that means a 1% move will result in a complete loss of your $1,000. Goodbye. Because leverage trading has another mechanism, which is called liquidations. This basically equates to a complete loss of your trade. Now look, leverage trading is not bad, it's not evil, it's just not for beginners. If used correctly, then leverage trading is actually a really, really great tool for traders, but it's for experienced traders. The big boy traders that I know, they usually use very low leverage, like 3x or 10x at a maximum. It's largely the new traders or the simple degenerate gamblers who use 100x leverage. That is a one-way street to getting wrecked. As a beginner, I recommend that you avoid leverage trading. Master trading altcoins with no leverage first, and then come back to leverage trading later on if you want to try it out. And finally, number 7. Remember that knowledge is power. In addition to knowing technical analysis, you will also want to have really just a finger on the pulse of the market to keep a close eye on the big trends that are happening. Watch out for news events that can create short-term price catalysts. I mean, for example, this is a big one that happened recently. Cardano, they announced the date of when Shelly was going to be rolled out. You can see on the chart here when it was announced versus today, a lot of big gains took place. Or watch what happened with the DeFi coins during a time in which Bitcoin was quieter. They all mooned super, super hard because that was the trend. As a trader, you must be flexible and you must be open to opportunities and stay focused on the end goal of making and taking profits and of protecting your trading capital. Anyway, those are just my 2 Satoshis. What about you? What trading tip do you have for new traders that has personally helped you to become a better trader? Let us all know about it down below in the comments section. Thank you so much for watching this video. I hope it was useful for you. If you're looking to get into trading, these are some tips that can definitely benefit you. And of course, I hope you're having a great weekend wherever you are and whatever you are doing. Long live the blockchain, and peace out till next time.